Hey guys, what's up? Sorry about the audio difficulty that the other stream had. I think that now I am actually live. Hopefully, let's see if this actually works out this time around. Yes. There you go. I had an issue with my microphone. And I hope that most of you guys can hit the right link. I don't know what happened, bro. My microphone just didn't work. I don't know why. I mean, I have been streaming all day long and I don't know what happened. Just sorry about that, guys. You know, this is live television, so sometimes, weird stuff happens. So my microphone wasn't working, but now I am live, and I think that some of you guys are lost because I have dropped like 3 different links so far. So sorry about that. Let's try to get this done, okay? Please drop a comment down below. Let me know what stocks do you want me to go over. And sorry again, guys. I had like 25 or 30 people waiting for me, and now I have 8 people. So I guess that some people are lost got lost with the 3 links that I ended up dropping. But let's get this done, guys. Today we had a bloodbath. Not across the board. We have a very ugly day on the NASDAQ 100 and most of the stocks that you love trading. The Apples of the world, the Teslas of the world, the NVIDIAs of the world got killed. And I guess that most of you guys have a lot of questions, like what is going to happen with Tesla, what is going to happen with NVIDIA, how low can AMD go, at what level should we buy the dip, and I don't know, whatever. Microsoft was a nasty day for most of for all of the 7 magnificents. There you go. The 7 stocks that have done the heavy lifting so far this year. So the Russell 2000 went down today 0.89%. The NASDAQ went down 2.05%. The Dow Jones went up. We saw some sort of interesting rotation over here, despite the fact that the rotation wasn't completed because the Russell 2000, the IWM, went down today as well. The S&P 500 went down, and the S&P 500 went down 0.68%. This could have been a way nastier day, guys. Take a look at the sectors. The 3 sectors that have done the heavy lifting year to date. So communication services, this sector got absolutely killed because of Netflix and Google. This sector went down today 1.98%. Technology went down 2%, and consumer discretionary went down 3.41%. However, these are very important sectors inside the S&P 500, but take a look at how the healthcare sector and the financial sector pretty much saved the day. If these 2 sectors, healthcare and financials, had gone lower today, we would have seen a massive bloodbath in the S&P 500. So healthcare went up today 1.66%, and the financial sector went up today 0.74%. So we saw a rotation within the sectors because we saw money rotating from the year-to-date winners, as I said, communication services, technology, and consumer discretionary. So this money rotated into industrials, financials, healthcare, consumer staples, energy, and so forth. However, we saw a bit of weakness in the Russell 2000, so we didn't have a complete rotation today in the market. Please let me know what stocks you guys want me to go over throughout the live stream. So we already went over the indices. I told you guys about the sectors. And let's go ahead and take a look at the SPY, guys. So it went down today 0.66%, and it closed the trading session at $452.18. If I zoom out here, guys, take a look. Nothing happened. Like nothing. Take a look. If I zoom in, we can see a bit of a retracement, and the bulls managed to close today's trading session slightly above this white line that you guys can see over here, the 5-day moving average. So this is some sort of positive signal for the bulls, because they managed to, or they actually broke the 5-day moving average to the downside into the closing bell, or when the closing bell was about to ring. And right before the closing bell rang, they were able to burst above this 5-day moving average. So we can make the case that tomorrow we could have a turnaround Friday. By the way, keep in mind that tomorrow we have options expiration. So tomorrow we're going to have a massive amount of options expiring, and that's a day in which usually volume picks up, and we usually see more volatility relative to any other trading session during the month. So that is something that you need to keep in mind tomorrow. So if the bulls tomorrow happen to be able to take out 453 bucks, and if they happen to be able to close candles above the area, that's a previous resistance back from July 18, they could easily gather momentum in order to fill this gap once again up to $456.20-ish. So this is a potential scenario that we could be seeing in tomorrow's trading session if the bulls are able to burst above $453.30 in order to be more exact with this level. However, on the flip side, opening tomorrow's trading session below this upward sloping 5-day moving average could open the door for a test, or a retest, I could say, of $449. This is a previous support back from July 14. You guys know that we have seen a very solid bull run in the SPY that started pretty much back in early May. Since early May, the SPY has gone up something like 14%, an amazing bull run over here. We have an upward sloping I would say, upward sloping 200-day moving average, an upward sloping 100-day moving average. We can also see over here an upward sloping 5-day moving average. So this index is under the total control of the bulls, no doubt about it. However, year to date, guys, the SPY, or the S&P 500, has gone up. Let me take a look over here. It has gone up 20%. So I know that a lot of you guys are taking trades with SPY calls and so forth, and you guys love taking trades with, as I just said, AMD and Apple and Nvidia. Be careful, guys, because the S&P during a regular year goes up 12% on average, and the S&P 500, or the SPY, has gone up year to date, as I just told you, almost 20%. So it has gone up a lot. You got to be careful taking trades with the SPY, and on top of that, you guys buy 0-day to expiration options, most of them call options, and you're trading stocks as of now thinking about more upside that are already kind of extended to the upside. Let's just put it that way. And we might see some sort of further pullback in the SPY. What about a visit down to the 20-day moving average? That would imply that the SPY could be retracing down to $443 approximately. This would be a healthy pullback, nothing to be really worried about. $443 in the SPY happens to coincide with a former resistance back from early June, and this is also a previous resistance back from mid-June. Sorry, this is a former resistance. I take that back. Former resistance back from early July, and this is also a previous resistance back from mid-June. This would be a very healthy little correction in the SPY of how much? Take a look, guys. 3%. Nothing out of the ordinary. And if you guys are buying, as I just told you guys, 0-day to expiration or options or call options that expire 2 days out, 5 days out, you gotta be applying tight stops. Today I was getting a lot of questions about AMD. So someone bought the $120 call that expires tomorrow, I think. And he was freaking out, obviously, because AMD fell off a cliff. So if you guys aren't buying extrinsic value, say that you buy calls that expire 1 month out or 2 months out, you have to be applying stop losses, because in my opinion, I could be mistaken, I think that we are due for some sort of little pullback over here, at least down to this 20-day moving average, down to $443-ish. Maybe we tomorrow we see another 52-week high that could happen, but be careful. The short still looks very bullish, but today we saw a very sizable profit taken in the leaders year to date. You know, the Apples of the world, the Nvidias of the world, the Teslas of the world. So if that profit taking continues, and that could very well be the case, then we might see lower prices across the board in most of the stocks that you guys like to trade. And that implies that we might see some sort of pullback, as I just told you guys, down to 443 or something like that, okay? Can you cover BBY? Absolutely. Okay, Vamdisar Beta. I have calls on Tesla for the 28th, 40% down. Do you see? Take a look. So you have calls that expire not this Friday, but the Friday after that, and you didn't apply a stop loss, bro, and probably, please correct me if I am wrong, you got those calls before the earnings report of Tesla. So you were very affected probably because of the Ivy crash, most likely. Yeah, let's go over Tessie. So Tesla posts earnings yesterday. This is a stock that I know very well, guys, because I am a shareholder myself. I own, as of now, I own 120 shares of Tesla. I have been trimming Tesla throughout this year. So what happened? They posted a very good report. Not a very good report. I take that back. They posted an acceptable report. But guys, a lot, and I mean a lot of good news were already priced in over here. Tesla has gone up year to date, or yesterday, when before the report came out, Tesla had gone up 200%. And I saw that you guys were buying calls. What were you guys thinking about, guys? So you have a stock that has gone up 200% year to date, and it is about to post earnings, and you guys were expecting the stock of this company to keep going higher. Think about that, guys. 200%. And obviously, the chart looks bullish. I mean, we can make the case that we still have over here a downward sloping 200-day moving average, which is not that bullish. But yesterday, Tesla had an upward sloping 5-day moving average and also an upward sloping 100-day moving average. But 200% in 6 months. And yesterday, because I always keep an eye on our Discord chat, you guys were buying calls. So you guys were taking a gamble, paying a very high implied volatility, by the way, and you guys were taking a gamble on the fact that Tesla was going to go to, I don't know, $320, $330. I got a message yesterday, guys, from someone, you know, in our Discord asking me about the possibility of Tesla to go back to all-time high, guys, after the report came out. And this is a stock that I know very well because, as I just told you, I am a shareholder myself. So be careful. And you guys know that you shouldn't be gambling on earnings. If you buy either puts or calls before an earnings report comes out, you are paying a very, but very expensive premium. And that implies that the movement that you need afterwards, once the report comes out, in order to make money, has to be a monster move because you are already paying a very high price for any option, and then you can be affected by the Ivy crash as well. So just don't do it, guys. In your case, you have a 20. What's your strike over there, guy? Vamdisar on Tessie. I mean, this stock got killed today, went down 10%, and closed the trading session at $262.90. So Tesla belongs to the S&P 500. Okay, it was added to the S&P 500, I don't know, like 3 years ago. So this is a stock of a company that has an important institutional participation. So the report, the latest earning, their last earnings report came out yesterday, and now the institutions need to digest the report. Again, it was a decent report. It was not a super amazing report like the ones that Tesla used to post. a year ago with the automotive gross margin sitting at 30% or something like that. And during the press conference, guys, Elon Musk didn't commit himself in order to improve the automotive gross margin of this company, which is the most important metric by a mile in the case of Tesla. So now the institutions need to weigh what are they going to do with Tesla. So how does that translate into the price action? That we need to wait for 2 or 3 days for the institutions in order to do whatever they are going to do with Tesla. Either buying more, which I don't think is going to be the case, or maybe trim their positions. So before taking a trade on Tesla, guys, wait until, let's say, Monday. On Monday morning, we are going to have a better picture. We're going to be able to see a better picture about where the heck is Tesla going. And I don't want to scare you away, bro. Let me take a look at the anchored value weighted average price of Tesla from its all-time high. So let's think about more downside for Tesla, which could be the case. Why not? Okay, so let me see. Take a look. If we take a look at anchored value weighted average price of Tesla that comes from its all-time high at $420 or something like that, we get $230. This is going to be a very, but very important area for Tesla if it keeps dropping. I'm not saying that Tesla is going to $230, but if Tesla happens to visit $230 in a violent fashion, in a violent manner, let's say tomorrow or on Monday, I might be a buyer myself of, why not, call options near $230 expecting a bounce. I'm not saying that that is going to be the case. In the short term, what could be happening over here, guys? We have a potential area of support that could be acting as such tomorrow at $253-ish. $253 is a previous support back from mid-June, and this is also a previous resistance back from early June as well. If Tesla, as I just told you guys, keeps dropping in a very violent way, we can expect at least a decent dead cat bounce from $253 that might allow us to take a short-term trade to the upside in the case of Tesla. On the flip side, the bullish scenario would be Tesla. I call this the stock of this company Tesla. Would be Tesla recapturing, or the bulls of Tesla recapturing $265, and if they can close candles above their area, keep in mind that $265 happens to be a previous resistance back from late June and also back from mid-June. So if the bulls can recapture this area, this is an important area, guys, and they can close candles above it, then we have a gap maybe up to, let me see over here, 200, yeah, why not, $278, which is a previous resistance back from mid-July and also back from June 21st. So these are the scenarios that I am seeing over here in the case of Tesla. And in the case of a collapse of Tesla, I am going to keep an eye on this anchored value weighted average price that comes from all-time high. As I just told you, $230. I would be a buyer of Tesla over there or in that vicinity if we happen to see that price, let's say in a few days, and wait, be patient. Remember, the stock of this company has an important institutional participation, and when an earnings report of any given company that happens to have an important institutional participation comes out, and the report happens to disappoint the markets and stuff like that, which we can make the case it was the case of Tesla, we need to wait 2 or 3 days in order to let the institutions to do whatever they are going to do. So as I just told you guys, on Monday, we should have a better perspective of where the heck is Tesla going. And you have a $270 call. What's your break even, bro? What premium did you pay for that call? What is your break even at? You have a 270 call. Yeah, so you might be getting, can you break even at 278? Probably, right? Because, I mean, I don't know what premium you paid. Yep. Got the Tesla calls today after earnings to avoid Ivy Cross. Good. Okay, that's good. Still 40% down today. Yeah, it got killed. It got absolutely killed. Absolutely. Can you cover BYD? Sure. I was taking a look at this stock myself, and I actually included the stock of this company on my watch list. Very good technical short. By the way, guys, let me take a look at the market structure of Tesla. I didn't take a look at that. Let me see what the supply and the demand is looking like over here. Let me see. 5:17 p.m. We still have the demand above the supply. Remember that the demand is on top of this chart, and the supply or sellers is on the bottom of this chart. So, yeah, I mean, we have demand that is above the supply, but the supply is starting to rise and above average. So we can make the case that we have an imbalance that slowly but surely is leaning towards the sellers. And we can reconcile that, obviously, with today's price action because Tesla got killed today. But let's see what happens in the next few days. I got wrecked on calls, but I tripled puts, made my money back. There you go. So you hedged. Awesome. Love it. Good. Okay, BYD, Boyd Gaming Corporation. Very solid chart, guys. A very solid uptrend. We have an upward sloping 200-day moving average, upward sloping 100-day moving average. Also, an upward sloping 5-day moving average. Absolutely nothing to complain about this chart. And we have a very clear resistance at $73.30 and a potential support right at this 5-day moving average, this white line that you guys can see over here, at around $72. This stock is about to break out. It seems we can see the RSI sitting at 58 points on the 4-hour chart. BYD is, let me see, 13% above its 200-day moving average. But mind you guys, I think that if this breakout happens to occur, we are going to be in no man's land. So yeah, if BYD happens to burst above $73, this is going to be an all-time high. So we don't have any previous technical reference in order to think about a potential gap to the upside. So how high can BYD go, guys? I don't know. 74, 75 bucks? That's anyone's guess. This is a very, but very solid technical chart, and it looks like the breakout is coming. Would I take a trade on BYD expecting this breakout from $73.30, making a new all-time high? That wouldn't be my trade. I would rather buy a slight pullback down to 72 bucks, which, as I said, is a previous resistance that coincides with this upward sloping 5-day moving average. This is, guys, this technical chart is like a piece of art. You guys should be trading these kind of stocks. Let me take a look at the market structure of BYD. So buyers and sellers, demand and supply. Let me see. And take a look, guys. Take a look. Remember, on top of this chart, you guys can see the demand. When I say demand, you need to think about buyers. So the people that make any stock to go higher. And on the bottom, sellers, the people that want any stock to go lower. Take a look at the imbalance, because when I use this tool, guys, on Market Structure Edge, I am looking for imbalances. If I have an imbalance in favor of the buyers, that implies that the stock of that company is likely to go higher. If I have an imbalance leaning towards the sellers, so I might be thinking about shorting that stock. And take a look at the demand is through the roof. It is way above the supply, and the supply is below average, which is this dotted line that you guys can see over here. I would say with a 95% of certainty that BYD is about to burst above $73.30-ish. It is going to make a new all-time high, and it is going to climb up to anyone's guess. I don't know, 75, 76. Very good technical chart for BYD. For sure. BBY, Diamond, I am a customer of Best Buy. Is this Best Buy? Or are you talking about Bed Bath & Beyond, Diamond? Do you want me to go over Best Buy? Because I think that Bed Bath & Beyond was delisted, right? And it is trading out of the counter. But someone asked me about Bed Bath & Beyond yesterday. Equifax, Dominique. So now we have more people coming over because I messed up. Or I don't know, my microphone got messed up. when I started the live stream. Okay, Best Buy goes down today 0.71% and it closed the trading session at $83.62. This is a very good technical chart, guys. This is an uptrend. We have a downward sloping 100-day moving average, which makes this uptrend guilty until proven innocent. But however, we have an upward sloping 5-day moving average, this white line that you guys can see over here. Remember that I used the 5-day moving average in order to determine who is in control of any technical chart in minor time frames. So over here we can see an upward sloping 5-day moving average. The 200-day moving average is flat. And let me see, Best Buy went down today, so we have a clear resistance. I am going to draw a line over here. Let me see. Let me draw a line here. This is a very clear resistance at $85. The bulls failed at $85 on July 17. They also failed at that level today. However, they managed to find support right at this 5-day moving average, which is upward sloping. So that's bullish. That's a bullish signal for Best Buy at around $83. So if the bulls can consolidate tomorrow slightly above $83, let's say that you guys see Best Buy closing candles at $83.30, $83.40. In regular market conditions, that might be that might be a sign that the bulls are gathering momentum in order to try to burst above, to take out $85, in which case we have another gap to the upside up to $87. This is a previous resistance back from early December of last year. If we were able to take this trade, guys, let's say from $83.20-ish up to $86, this would be a 4% profit trade. Nothing to sneeze at. The RSI is sitting at 59 points, very healthy from a technical standpoint. This is a compelling chart. Let me take a look at the supply and the demand of Best Buy. Let me see. And take a look. Watch out for that 5-day moving average acting as support, because the supply is starting to rise and it actually is slightly above the level of the demand. So sellers are starting to gain control of Best Buy. I would be careful here, guys, especially if this 5-day moving average happens to be broken to the downside. $83 is a very important support. If this support happens to be, as I just said, broken to the downside, we could be seeing Best Buy maybe paying a visit down to $80. Previous support back from a few days ago. So this area, this level, $83 is going to be very important for good old Best Buy. There you go. Take a look at Google for calls tomorrow. Sure. Also, can you break down cost? I have an option up 37%. Why you haven't locked in the profit, bro? Junior, you are up 37%. Wow, you guys are so patient with some trades. Let me see. I am being asked about Google. Alphabet. Yeah, it went down today 2.65% and it closed the trading session at $119.53. The sellers have been making progress over here because they were able to break the 5-day moving average to the downside, and we have two potential areas of support over here. So Google went down today 2.65% and it closed the trading session at $119.53. So I see two potential scenarios over here, guys. If the bulls can consolidate above $119, so if this level keeps acting as support, they could gather momentum in order to fill the next gap up to the 5-day moving average at around $123. And if they happen to be able to burst above $123, we have another gap to the upside up to $127. Very important spot, guys, this level, $119. However, let's say that Google opens tomorrow's trading session slightly below $119, and the bulls failed at bursting above that area. We could see further downside down to $116, which is a previous support and a very well defined previous support from July 11th, from a few days ago, we can say 9 days ago. So these are the potential scenarios that I can see over here. We have an upward sloping 100-day moving average. The 200-day moving average seems to be starting to upward slope, which is also a good sign. So nothing really wrong with this short. We can make the case that since this 5-day moving average was broken to the downside in a very noticeable way today, the sellers are starting to make progress. But this technical chart is still in control of the buyers in major time frames. So if tomorrow you guys see Google holding $119 as support, and in regular market conditions, guys, remember that Google is a very heavy stock inside the Nasdaq 100 or the triple Qs and the S&P 500. So if you guys see, let's say the Qs having a green day and not going lower, and if Alphabet happens to hold $119 as support, then maybe we could see a retest of this 5-day moving average at $123. And as I just said, opening the trading session below $119 could open the door for a retest of $116. Let me take a look at the supply and the demand of Google. Let me see, Alphabet. Let me see what imbalance do we have over here. Is it an imbalance in favor of the buyers or the sellers? So take a look, guys. The demand is rising, but the supply is rising is also rising and slightly above the demand. So we can reconcile this market structure chart relative to the technical chart. And why? Well, because the 5-day moving average was broken today to the downside. That's a positive signal for the bulls. They seem to be regaining control of this technical chart in obviously minor time frames, because if we take a look at major time frames, we are still seeing over here an uptrend. So this market structure, this imbalance that I can see over here between the demand and the supply, makes me believe that if this support of $119 doesn't keep holding or doesn't hold, we could be seeing $116. In the case of Google, that would be an interesting spot in order to buy the dip over here. Also, is the RSI reliable? Bro, I don't really use the RSI a lot. I have it here on my chart because most of the guys of my Patreon are accustomed to using the RSI, the Relative Strength Index. So what's the problem with the RSI, guys? That for some traders and some market participants, the RSI or the Relative Strength Index became a religion. So if take a look at Google, take a look at the RSI on the 4-hour chart. It is at 26 points. I guarantee you guys that as of now, we have a bunch of market participants seeing the RSI of Google at 26 points on the 4-hour chart, saying, oh, okay, but this stock is oversold. I should, buy some shares or get some calls because it is due for a bounce. And that isn't the case. So how can we determine, guys, think about this. How can we determine if a stock is oversold or overbought? It is impossible. I can say, taking into account how higher relative to their moving averages, I can tell, I kind of can tell that a stock is overextended to either the upside or the downside. But I cannot say, based on the relative strength index or the RSI, that a stock is either overbought or oversold, because it is impossible to know. The RSI is just a lagging indicator that some people misuse, according to my opinion, in order to say that this stock is very overbought and I should get puts, or this stock is very oversold and I should get calls. So don't trust that much the RSI. I trust the moving averages way more in order to kind of have an idea if a stock is extended to either the upside or the downside, depending, as I just told you guys, of how higher or how lower any stock is relative to their moving averages or relative to its moving averages. But in the case of the RSI, guys, I have it over there, but it isn't a religion for me. I don't think that this is a reliable indicator in order to figure out whether a stock is going to retrace or bounce. So I don't use it that much. When you say buy the dip, is that buying shorts or buying collapses and a dip? Whatever you prefer. Whatever you prefer. Yeah. For the most part, I am an options trader, guys. But depending on the implied volatility, sometimes I buy shares. So for instance, guys, yesterday I took 2 day trades with Carvana. And the implied volatility of Carvana is insane, you know? It's like absolutely insane. So I was seeing Carvana holding 47 bucks as support yesterday, or 49 bucks, I think. It is dropping as of now after hours. And it burst above VWAP, and I was like, okay. And I told you guys, by the way, on Discord, hey, Carvana seems to be warming up in order to make a push to the upside. But when I took a look at the implied volatility, take a look at this. Is insane, guys. 223%. That implies that if I happen to buy a call option, first of all, I am going to be paying a very expensive price for that call option. And on top of that, I need a monster move to the upside in order to make any decent amount of money. So I decided to buy shares. So if the implied volatility is typically above 70%, I prefer buying shares in order to avoid paying a very high premium for either a call or a put. And if the implied volatility is below 70%, I, for the most part, buy options. Vamsidar, lol, you're just explaining my understanding of RSI. Funny, I fell into that trap. Thanks for enlightening. Absolutely, man. Don't trust the RSI, guys. It is. I take a look at the RSI, but don't trust it. And don't believe that the RSI is a religion, because if you do it, you're going to end up losing money. Absolutely. I saw Tesla was at low RSI and bought the calls hoping to exit quickly. I never made it up again. Correct. And on top of that, guys, if you're going to use the RSI, you need to use major time frames. Let's go ahead and take a look at Tesla. Let me take a look at the daily chart. Take a look at the RSI, guys. It is at 50 points. So in relative strength index terms, in major time frames, Tesla is neither overbought nor oversold. But if I take a look at the 1 hour chart, oh, Tesla is due for a bounce. Take a look. The RSI is sitting at that 18 points. So don't trust the RSI. Needless to say, don't trust the RSI in minor time frames. Always take a look at the RSI beginning or starting at the daily chart. And if you happen to see either a very elevated RSI reading or a very low RSI reading on, let's say, the weekly chart, that's a whole different story. It's like, okay, that's a bit more reliable. Okay, take a look at the RSI of Tesla, guys, on a weekly chart. 63 points. So it depends. It depends a lot on the time frame, and do not trust the RSI in minor time frames, please. Enphase Energy, abso-freaking-lutely. Let's go ahead and take a look at Enphase. We're having a very nice chat over here today, guys. Enphase went down today 5.16%, and it closed the trading session at $175.92. Guys, this is a stock that the guys of my Patreon ask me about every single fucking day. Every single day. So I have a bunch of guys on my Patreon that love Enphase. Like, they love it. And I always tell them, be careful. This is a major downtrend. We have a downward sloping 200-day moving average, downward sloping 100-day moving average, and this technical chart is under the total and absolute control of sellers. So you don't need to try to guess the bottom over here. And I have been telling my guys, I wouldn't touch Enphase until and unless the buyers can at least burst above this blue line that you guys can see over here. This is a 100-day moving average. So if the bulls can, or the buyers can burst above the 100-day moving average and they can consolidate above that level, I would consider maybe doing something with Enphase. I rarely ever trade downtrends, because if you trade a downtrend, guys, you are fighting against sellers. And that's a tough one. And why do I say that, guys? Because say that you like Enphase. Okay, I don't know, maybe you like the company or whatever. And say that you believe, okay, Enphase not long ago was trading at $340. Maybe I want to grab some shares or grab some, I don't know, leaps maybe, because I have an upside potential of, I don't know, 50%. And that could be the case. But guess what, guys? Since this is a downtrend, you know that you have buyers trapped all over the place. So you have people holding the bag at $205, $228, $256, $287. So what is going to happen if Enphase keeps going higher and happens to match the average cost of all of these buyers that are trapped as of now? They are going to dump their positions more likely than not. So you have multiple areas of overhead resistance or multiple areas of supply rather than demand. So a downtrend basically tells you guys that you have way more sellers in your way than buyers. So why would you fight against sellers? It makes no sense. I wouldn't touch Enphase below this 100-day moving average or below $190-ish. This would be a stock that I would be trading just for a quick trade maybe. I wouldn't be thinking about a lot of upside over here. Let me take a look at the supply and the demand of Enphase. Let's see what is the supply and the demand of Enphase looking like. Let's see if we have any positive imbalance in favor of the buyers over here. And we do, guys. We have a rise in demand that is way above the supply, but way above the supply. This is the supply, or sellers are about to burst above average. So the market structure or the imbalance that I am seeing over here when it comes to buyers and sellers, sorry guys, makes me believe that the buyers have a fair shot at taking out $188 and maybe consolidating above that level, which could open the door for further upside, maybe up to, let me see, that could open the door for $200 maybe, which is a previous support back from mid-February for Enphase. What do you think of C3 AI? Junior, what do you think about Apple? 215 call, I'm looking for a bounce, but with the SPY and your technical saying more than maybe. Okay, I am going to circle back on that. I'm just telling you guys to be careful here. This is a 4-hour chart of the SPY. The buyers are in control. Today we had a slight pullback and stuff like that. But be careful in the case of Apple because it is about to post earnings next week. Take a look. You wanna buy calls, correct? But guess what, bro? So Apple posts earnings next week, I think. Am I right or wrong? Let me see. No, Apple posts earnings not next week, but the week after that. So if you buy calls from now on, or from now until the report comes out, you're going to be paying a very high premium. It doesn't make any sense, in my opinion, right? And I'm circling back to the SPY. As I just said, guys, a retracement down to the 20-day moving average would be regular market behavior. There's nothing wrong with that. I'm not saying that is going to happen. And I just told you, if the bulls lose this, or let's say that allow the bears to break this upward sloping 5-day moving average to the downside at around 450, let me see, $452, $452.30 each to the downside, then why not? We could see, further downside. But in both, guys, minor time frames and major time frames, we have the buyers in total control of the SPY. No doubt about it. I'm just saying that maybe we might see further downside, maybe down to $443.50, $443.50 each. That would be regular market behavior, but I'm not saying that is going to be the case. I'm just telling you guys to be careful because the SPY has gone up a lot year to date. Needless to say, Apple. Let me take a look, by the way, at the technical chart of Apple, but make no mistakes, guys. The SPY is under the control of buyers. No doubt about it. Take a look. Apple, guys. Apple has gone up year to date 58%. This is no joke, guys. This is the largest stock of the world, market capitalization wise. So we have a bunch of gains already accumulated over here. And guess what? Apple is about to post earnings probably in a few days. I don't know, 10 days or 12 days. So take a look at what happened in the case of Netflix and Tesla. Again, both reports were very acceptable. Both. I would say I would prefer Netflix report over Tesla's, but both reports were very acceptable, to be honest with you. And both stocks got killed. Why? Because those stocks were priced into perfection, because they have gone up a lot this year. And the same analogy applies to Apple. It has gone up a lot, and the markets are going to be extremely demanding with Apple when the report comes out. The markets are going to require a pristine report in order to award Apple with further upside. So I think that might be the narrative that we are going to see throughout this trading session. Because most of these 7 stocks, the Magnificent 7, the Nvidias of the world and the Apples of the world and the, Metas of the world have gone up a lot. We have a bunch of gains out there already accumulated, and those stocks are pretty much priced to perfection. So a better than feared report will no longer help the stocks of these companies in order to keep going higher. Be careful over there. In the case of Apple, from a technical standpoint, guys, there's nothing wrong with this chart. We have a upward sloping 200-day moving average, an upward sloping 100-day moving average. We also have an upward sloping 5-day moving average. This technical chart is under the absolute control of buyers. And guess what, guys? The bulls, Apple went down today 1%, and it closed the trading session at $193.13. We basically saw a little retracement down to this upward sloping 5-day moving average. So we can make the case that if Apple happens to keep holding this support at around $192.50, the bulls could be gathering momentum in order to make another push higher, to maybe fill two potential gaps to the upside. The first one up to $195, and the second one up to $197. So from $192.50 up to $196, this would be a 1.50% profit trade, and up to the all-time high of Apple at $198, this would be a 2.50% profit trade. However, on the flip side, who knows, if we keep seeing more downwards pressure over the NASDAQ 100 and the triple Qs, then watch out for the support 5-day moving average. Let's say that Apple opens the trading session tomorrow below $192.50. And if the bulls are unable to recapture that level, that maybe could imply that we could be seeing Apple paying a visit down to $188, which is a previous support back from mid-July, and this is also a previous resistance back from mid-June. So nothing wrong with this technical chart, but again, Apple is about to post earnings, so be careful here. This is just an awareness, okay? Let me take a look at the supply and the demand of Apple. Apple Inc. Let me take a look here. Take a look. 48 minutes in. Okay. So the demand is flat. It hasn't changed much. Ideally, guys, let's say the best looking market structure when it comes to buyers, as I just told you, is a rise in demand and a fall in supply. We don't necessarily have the opposite, but the demand is like, flat. It isn't going higher, and the supply is starting to rise. So I'm thinking that maybe we are about to see Apple paying a visit down to $186, which it wouldn't be a big deal regardless. C3 AI, the future of mankind, guys, for some people. C3 AI went down today 4.34%, and it closed the trading session at $38.97. Okay, I'm going to ask you guys a question. The implied volatility of C3 AI is sitting at 100%. 100%, guys. Would you buy calls here? And I am trading this ticker, by the way, full disclosure. I have been day trading AI on multiple occasions, and as of now, I have a losing position over here with shares. So, would you buy calls here, guys? Do you think that this is worth it? A stock with an implied volatility of 100%? See, it is stock to cuff. And I have to go over Casco. No way. Get 6 instead. Correct. Or you can sell volatility, guys. You can sell puts. That would also be a potential opportunity, guys. Check this out, guys. Let me take a look. So let's go to August 11th. You need a collateral in order to sell a put. You need $3,897 according to the closing price of AI today. So let's say, guys, that you sell a put. Listen to this, guys. August 11th. Let's say that you sell, let me see, let's sell the, pretty much at the money, the $38 put expiring on August 11th. You're going to be paid $3. $3. $305 for a put that expires on August 11th. Let's say that AI goes to the moon. You're going to be making $300, just selling a put that expires in, I don't know, like 20 days. And this could also be a quick trade, guys. So let's say that you sell the put and AI, I don't know, goes up 20%, which could happen in any given trading session. So that put, or the value of that put, is going to depreciate a lot. You could be making $150, $200, no problem. So when you guys see this kind of very high implied volatility, ideally, you should be a seller of options rather than a buyer. Just to let you guys know. Okay, the technical short, this is a mess, guys. But however, over here we have an uptrend. We have an upward sloping 200-day moving average, upward sloping 100-day moving average, and the bulls, despite the fact that the stock of this company went down today 4.34%, the bulls were able to hold as support this 5-day moving average at around $38.80-ish. So that is kind of that is kind of good news for the bulls. So we have the convergence of the 5-day moving average with a former resistance back from mid-June. So in other words, guys, if you see AI opening the trading session tomorrow above $39 and let's round it up. I mean, $39.50-ish. That could be a sign that the bulls are gathering momentum in order to make another push higher and maybe being able to fill this gap up to $43. Previous resistance from yesterday and also a previous resistance back from a few days ago. I don't know, like 8 days ago. By the way, guys, keep in mind also something. Remember, I just told you guys about the sectors. Today we had a risk-off day. Risk-off. Why? Communication services went lower, technology went lower, and consumer discretionary went lower. So the markets today went after risk-off stocks and sectors. So what do I mean by that? If tomorrow you guys see the NASDAQ 100 getting killed, and Apple getting killed, and NVIDIA going lower, and AMD going lower, you guys can tell that we have a risk-off mode out there. So if we have a risk-off mode, you cannot be trading higher multiple stocks such as Carvana and AI. So before taking a trade with AI, regardless of the technicals, you need to make sure that the environment of the trading session is a risk-on environment. So if the 7 magnificents are going lower, you need to stay away from AI and the garbage of Carvana and so forth. This is something that you need to keep an eye, okay? Keep an eye on. So from a technical standpoint, guys, watch out for any support slightly above $39.50-ish. I'm curious about the market structure of AI. Let me see. C3AI. What do we have here? Let me see. So buyers and sellers. And yeah, this is a tricky one. because the demand is decreasing, but the supply is also decreasing, guys, and below average. So we have a fall in demand, but also a fall in supply, and we can make the case that the level of the demand, so the level of buyers, is higher relative to the level of sellers. So if tomorrow we happen to see a turnaround Friday for the 7 Magnificents, then maybe AI could be about to fill this gap once again up to $43 approximately. Let me take a look at Casco. You guys ask me about Casco wholesale. Let me see, what do I have here? Wow, take a look, guys. What a turnaround, bro. Last time I checked Casco, it was downtrending, and I rarely ever trade downtrends, and it was getting killed. And what do you know, guys? And now I think that at Casco's shops, you are being requested, or if you go to any Casco shop, you need to hand them your ID, right, in order to purchase stuff. So the market's like that. Okay, Casco went up today 0.51%, closed the trading session at $556.96. This is an uptrend, guys. Total uptrend. We have an upward sloping 100-day moving average. The 5-day moving average is also rising. We can make the case that this breakout from $545 was a bit violent, and I wouldn't necessarily chase Casco over here. I would rather wait for some sort of retracement down to this previous resistance at $545. This is a previous resistance back from early July. This would be healthy because, as I said, guys, the jump to the upside from $523 up to this 52-week high at $560 was a bit, let's say, violent. So I would rather take a trade over here with Casco retracing a bit down to $546, and if I happen to confirm support over there, I would be probably grabbing call options from $546 up to the new 52-week high of Casco at $560. This would be a 3% profit trade. This would be a nice trade. Take a look at the RSI, 76 points on the 4-hour chart. It is a bit elevated, but let me take a look at the RSI on the daily. On the 1-year chart, 71 points. It's a bit elevated, nothing crazy. Okay, let me take a look at the supply and the demand of Casco. What do we have over here? Let me see. And the demand is rising, or starting to rise once again. The supply is also rising, but we can make the case that this is a tie. So we have buyers and sellers in the same position from a market structure standpoint. So I think that we have higher prices coming up for Casco. What happens if Casco keeps going higher? Let me see. What would be the next gap? We have a gap up to $570, which is a previous resistance back from late December of 2021. Wow, what a turnaround for Casco, guys. Very good job for the bulls of cost over here. There you go, guys. How about SOFI? I love the company, but I'm concerned on the risk with loan defaults. They will supposedly benefit from the student loans, which forgiveness, which pretty much expired. And now I listened to an interview of the CEO of SOFI, I don't know, like 2 weeks ago. And he was saying that they are interested in helping, I am quoting, helping students in order to refinance their loans. So that's a positive catalyst for SOFI, because that implies that they might actually increase in the revenue based on the students that are going to have to refinance their student loans. This stock was on my watch list today. So SOFI went down today 2.84%, and it closed the trading session at $9.57. This is an uptrend, guys, upward sloping 100 DMA, upward sloping 200 DMA. We can also see over here an upward sloping 5-day moving average. Absolutely nothing wrong with this chart. Be careful here with the 5 DMA. Let me draw a line. So if the bulls managed to, despite the fact that SOFI went down today 2.84%, the bulls were able to hold this 5-day moving average as support into the closing bell, $9.46. This upward sloping 5 DMA happens to coincide with a previous resistance back from mid-July. So let's say that SOFI opens tomorrow's trading session above $9.45. If the bulls can consolidate above that level, that could be a sign that they are gathering momentum in order to fill this gap up to $10.13. It doesn't sound like much, guys, but get this. Say that we get calls or shares or whatever of SOFI at $9.60, and if we happen to be able to write them up to $10.10, this would be a 5% profit trade, guys. Nothing just needs that. And mind you, this is a risk-on stock. So again, if tomorrow we keep seeing a rotation from tech and higher multiple stocks into cyclicals and defensives and stuff like that, I mean, that's pretty much the same situation that we saw today. This is not a stock that you want to trade to the upside. Maybe we can get puts if, I don't know, if the support of $9.50 happens to be broken to the downside. Let me take a look at the supply and the demand of SOFI Technologies. Let me see. What do we have here? Take a look. The demand is through the roof, and the supply is decreasing or falling and below average. So I'm thinking, and based on the market structure of SOFI, and obviously in regular market conditions, with the markets showing some sort of risk-on appetite, that we are about to see SOFI climbing back up to $10.20. Approximately. Okay, guys, I am going to wrap it up here. I'm very tired. You guys know that I live stream throughout the whole trading session. Keep a close watch or keep an eye on my Discord channel because I am calling balls and strikes. I am letting you guys know everything that you need to know, literally, guys. If you guys take a look at my channel, and you guys know that we have very good pro investors in our community, but when it comes to the SPY, I am letting you guys know everything that you need to know about the SPY, 100%. And Alpha does a great job as well with the SPY, but I am 100% focused on the SPY. So just keep an eye on my channel, and you know that I am going to be over there calling balls and strikes. Tomorrow, once again, I am going to be wearing my umpire suit. So thank you very much for coming over, guys, and sorry for the technical difficulty that I had when the stream started out. And you guys have a great day. By the way, remember, I am always asking you guys this favor, if you don't mind, please, because I am going to release this live stream on my YouTube channel once I'm done. But you guys' comments aren't reflected on the comments of the video itself of the stream. So if you don't mind going to my YouTube channel and dropping a comment, hey Alvaro, thanks, and stuff like that, and hitting the like button and stuff, that's a favor that I am always going to be asking you. So thanks, guys. Enjoy the rest of your day, okay? Thank you very much for coming over. Bye bye. Take care. Bye. 1 hour. Oh my God. I need a beer. Bye.